financial literacy, and the human condition. Welcome to Financial Fitness with the Money Doctor, Dr. Francis Rayam.
Hi, it's Francis. I just wanted to take a minute to thank you for watching this video. If you're catching us on YouTube, please help us help others by clicking like, subscribe, and all notifications so you don't miss any videos. And check back for the next video. I think you're going to love it. Thanks again. For more information, you can visit us at hugyourmoney.com.
Welcome to Financial Fitness. I'm Jess Tyler, along with the Money Doctor, Dr. Francis Rayam. Hi.
Hi, Jess. How are you?
I am doing well, and I always love to see when we have a full house. We've got guests today.
We do have guests today. That's those lovely people that if you're watching this on video or in the corner of my screen here. And it's Angela and Mike, and their last name is Tourville. And I will tell you just for curiosity's sake, they aren't married, at least not to each other. and we're going to get the scoop on them. But I want to say that they're both from Annie Mac Home Mortgage. And between them, they have, I don't know, they don't look old enough to do it, but between them, about 50 years of experience in this business. And so, it's surprising when you hear that number, isn't it?
Right, yes.
So I've invited them here today because we found some synergy in the way that we like to work with the public. And although no one ever believes us when we say this, it has to do with actually doing the right job, actually caring for the people that we advise. And then because of that, building a long career with lots of referrals, et cetera. So in order for people to get to know you a little bit, the way I've got to know you slightly, I would love it if you would share your family history with us and just give us some idea of how you are related and how you got into this business. Who wants to start?
Would you like to go first?
Sure.
Okay, glad to volunteer you.
Well, I met Mike's amazing son when I was 17 years old, and he wouldn't leave, so I'm here still. And Mike has been a very critical piece of my career ever since the beginning. He was, I don't want to take too much of your story, but he was running countrywide offices over here in Western Mass. Ended up, introducing me to another mortgage company, actually, and got me in there. And that sort of started, the kickoff, I guess, away from, depository bank work and into the lending world. And I've never left that. So that's in a nutshell.
It's so funny because now I'm going to talk about her. We're going to talk about each other. Isn't that the way that works?
Sometimes.
But no, Angela has done a phenomenal job over the years when she first started as a receptionist, a loan officer assistant, a processor, loan officer, and now branch manager. So she's progressed through all different positions, giving her a really wonderful perspective of the ins and outs of everything, is in a restaurant, behind the kitchen and out front. She's got a perspective of both sides of this thing. And where my experience comes in managing offices years ago, same with, I used to manage the underwriters and processors and loan officers. That helps tremendously because you're not just a salesperson. You start to see what goes on in the back room, so to speak. And I think that does give both of us a very good perspective. And you talked about an approach. It's one thing to say, yeah, we really care about our customers. It's another thing to demonstrate it every day in what you do. And I think that's really what I think differentiates Angela. And I'm going to say, I left the business for a little bit. I was thinking about, Angela had talked to me about coming back in, and honestly, it's her infectious, contagious enthusiasm that drew me back in. And I joined Annie Mac, and honestly, what we saw, I said, this is exciting stuff. So yeah, here we are working together after all these years. So it's a wonderful thing. Yeah,
that's wonderful. I just want to say, Angela is also the mom of 4 children and a dog, right? Jess,
Why not?
our co-host Jess has how many children? 3?
Yes. And let me just interject for a minute. Okay, so the son would never leave. Does that mean you married the son and this is your
I
father?
did. Yeah, I did.
Okay, there we go. Okay, got it. All right.
Yep.
So that's your dad-in-law. All right, very cool.
So anyway, that gives you the background of being very human in a very inhuman environment of dollars. And that's what I think we share. So I asked you for some bullet points. I was like, hey, we could talk forever. We could have done a show just in our first conversation, right? And
Right.
you sent me some brief bullet points, like we could talk about any of this stuff. And they ranged from credit tips and tricks to house hacking. Okay. And in the middle was like, first time home buyers, VA loans, things that people always talk about. So I'm sure that we're going to do more than one show because there's just way too much information for us to cover in a show like this. But I wanted to ask you specifically, if you don't mind talking about, I definitely want to talk about first-time home buyers and VA if we have time, but house hacking. Can you explain house hacking and teach us something about it?
Well, that's a show in itself too.
Well, it might be this
So,
one. Let's see.
yeah, well, there's a few ways house hack. So we could follow TikTok and what they tell us to do, and it's buy a house, live there for a year, and go get another one.
Right.
It's that easy. It's not. So to just hit on where that falls flat, because on a daily I overcome TikTok videos, and house hacking is a big one. And where it falls flat is when you're getting a mortgage and you're preparing and planning for your future accumulation of properties. There is no hack. It's planning. And so that's what we do. We sit with the client, we plan them. And the big thing that isn't discussed is the amount of assets you need in order to purchase that next property, as well as reserve additional funds left over after you purchase. And when I get into having to have 6 months of a mortgage payment in additional funds, it always falls flat. It falls flat. No one, and I come across lenders who prepare their clients to house hack and get that secondary home. They're not preparing them. We actually just saved one that will be closing in a couple weeks from bad advice.
Yep.
So house hacking is specific and personalized, I think, to you and your goals in the future with real estate, such as a real simple touch on what that could be.
Jess, you had a question?
I guess I don't really understand what house hacking is. Like, everybody would buy a second house if they had the money to do. How is that a hack? Like,
so it's all about the occupancy of the home. Are you going to live in it, or are you going to use it as an investment? And there's no real black or white law or rule or guideline that says how long you have to live in a home before you can move out and go occupy another. So when you're buying multifamilies, if you occupy that multifamily, you can put as low as 3.5% down or 5% down. If you do not live in that property, you could be looking at 20 or 25% down. So it's a huge difference. And so the hack is the least amount of money up front as possible to start to accumulate properties. And so it all comes down to occupying, if you will, or not.
And there's more
so the
to
hack
it than...
the hack is to occupy for a year and then go get another one.
but would you have enough equity in that house to be able to afford another whole mortgage? Like, most people I would think aren't able to do that unless you already have money going into it.
Correct.
Right.
So there's a lot of shortcomings with people that just listen to these quick house hacking things, because you have to look at the income that you're qualifying with and what income can you use. Are you filing your taxes property? When I'm dealing with specifically a first-time home buyer who comes to me to house hack, first we stop and we say, why do you want multifamily? And if the reasons are because I want to own real estate, you know, I want to own a ton and let that be my retirement plan or how I make my living, we step back and we really look 5 to 10 years ahead and how can we position you now to do that.
Yep.
And then a lot of times we start to develop a team. And this is just how I consult. I do find people after they've bought in that first home come to me thinking they're going to get the other one and use equity within 12 months. I have 3 clients right now I had to get bad news to. And I have to tell them the sweet spot's 5 years if our homes keep appreciating like they are. So equity is a thing we have to consider, available assets and leftover assets, and also qualifying for 2 mortgage payments with your income. It's technical, it's specific. Everything's personalized to the person and what they want to do and how we can move them forward. And it takes a team most of the time. So hacking is a very bad word. It's just a trigger word, I think. It gets your attention. The attention I like to have is a consultation and really plan, for now in the future.
You can almost look at an obvious consequence of this too, right? If you don't live, if it's not an appreciating time, you're going to be over leveraged on properties with the maximum mortgage, the highest mortgage payment, and upside down, not on one, but on a few properties. And that's a dangerous position to be in without planning, like Angela said. So certainly it has to be thought out ahead of time. What could go wrong?
Yeah.
Be careful.
Oh, I don't know.
You have to plan for that. Yeah.
Let me think. Oh, I don't know, the 2007, 2008 housing bubble. Oh, gee. So there's lots more to this too about house hacking. Some people want to stay in a property for a year because they think they're going to avoid capital gains tax because it was owner occupied. Some people do this well using a 1031 exchange, but that takes exactly what Angela and Mike are both saying. That takes planning. You have to identify that property in advance. But that's a way to roll one property into another if they're like properties. We could go on for an hour about 1031 exchanges, but they have to be like properties and they have to be either identified within 90 days or there is a way to do it afterwards, but it's more complicated. But the point I think we're all trying to make is, everybody is, seduced by the idea of owning lots of real estate, especially in a scary market. And the appeal of a TikTok video that just says, this is really easy, just here's your hack. Okay, we're not talking about plastic covers for your bowls in the kitchen and here's a hack. We're talking about your life. This can drag you down the tubes if you do it wrong. Ruin your credit, put you in financial disaster, throw you into bankruptcy. I'm not trying to scare people. I'm trying to say, get someone who's qualified, who isn't telling you in a TikTok video that you just do it like this, no problem. And at least get their opinion before you run off and say, I got this great video, house hacking. Look at how easy this is. There's just too much of that going on. So thank you so much for at least a tidbit of house hacking. And we will run out of time if I don't start moving to the next topic, but we'll go to break and come back, of course. But when we do come back, I'm hoping that we can talk about, maybe Jess will have a preference, but first-time home buyers or a VA market, whatever we have time to get through. And this information can all be expanded later on and whatnot. But I ate up a little bit of time with your family story because I think it's important, particularly locally, if you're going to work with somebody, although you could be working with them from anywhere, to get some sense of who they are, not just what they do.
Great.
Yeah. Real quick, I just wanted to add on to what were you saying about the 6 months you need of mortgage payments? Is that in addition to the down payment you're talking about?
It's in addition to down payment and closing costs, correct?
Reserves.
Wow.
Reserves. Yeah. Reserves. So 6 months of reserves, because there are people, what if your tenant doesn't pay? Right. So we're all, when we're qualifying, we're looking at risk and are you able to repay?
Let's clarify that, Angela. Is that for your single home mortgage or is that rental properties?
These are when you start to accumulate multifamilies.
Right.
But it seems like if that's the case, then even though you're putting down a smaller down payment, if you're required to have that reserve, it kind of washes, doesn't it?
It could, yes. The beauty of reserves is we can use retirement money. We don't have to, it doesn't have to be liquid money for reserve. It just has to be accessible in a hardship.
Okay. Let's get your phone number, Francis. In the meantime, if people have questions.
Sure. They can reach us at 413-773-3333.
Or they can go to hugyourmoney.com. We'll be back with part 2 of Financial Fitness with the Money Doctor, Dr. Francis Ram on WHMP.
Financial Fitness with the Money Doctor is underwritten by Franklin County Technical School. We build futures. Visit fcts.us or call 413-863-9561.
Welcome back to Financial Fitness. I'm Jess Tyler along with the Money Doctor, Dr. Francis Ram, and we have guests today. Hi.
We do. Hello. We have Angela and Mike Tourville from Annie Mac Home Mortgage. And just before the break, I was asking about VA loans. And so I always found VA loans to be very interesting and very misunderstood and underexposed. And VA loans are pretty cool. So will you tell us a little bit about what that means at AnnieMac Home Mortgage?
Yeah, so VA loans are cool. So they are providing an entitlement to our veterans that have earned this. And what they've earned is to buy a home, a subsequent home with 0% down. They don't have to be first-time home buyers. They could be on their 10th property and use their entitlement. With that said, the other really cool thing about the VA financing is, you know, people basically know if you don't put 20% down, you pay what's called PMI. VA does not charge that to their military community when they're taking advantage of these loans. And they also have some of the best interest rates. So you couldn't get a more perfect storm of 0 down, top tier rating, and no PMI charging. That means the lowest payment you can probably structure for someone. Now, when they're out there shopping, sellers are seeing 0 down and they're thinking they're marginal clients. Most of the time, they are probably the more qualified than my individuals putting 20% down. But because they're putting 0 down, they're using government financing. Sellers and realtors have been conditioned to think that that's going to be a sloppy situation and it's probably not going to pass the finish line. When I've never seen a VA buyer be marginal and not anywhere close to not being able to get their financing. I could get super technical on their financing, but they struggle in the market. We always say this: if you have offers in on a house, sellers are looking at them this way: cash, conventional 20 down, government, and then people have to sell their houses to buy the new one. That's sort of the flow of what's going to get presented to a seller. Yeah. So they're going to be at the bottom of the list, even if they have the highest purchase price offer or less requests to the seller. Due to that 0 down and it being a government loan, they struggle and a lot of times are passed up, unfortunately. I've specifically heard my clients get passed up because of VA financing, which isn't even legal to say, but it's a thing.
I was just going to say that should not be the case. In fact, it should really be the opposite. Hey, you fought for our country, you're in this benefit. I'm going to support that.
Right.
You're offering me the same price as everybody else, and you have this financing, and I know that this financing means that you're going to end up with probably more cash reserves after the mortgage is done because you didn't have to put it down on the house. You got a better interest rate, so you're probably able to make your payment okay. Yeah, this seems like a good thing to me. Mike, you had something to say about this. I could see it on your face.
Well, it was just a shame. It's too bad that the financing even has to be revealed. It's just too bad that it has to be, because that would certainly change things. But just once they're aware, it's unfortunate that perception's out there. And
that's a very good point.
People at a disadvantage. And it's too bad, but yeah.
Yeah, and we understand that. So what we've tried to do is create other strengths to their offers. One being me maintaining a military housing specialist certificate. So I make sure I'm educated in those financing tools. I know how to speak the language, you know, and how to read. They have special pay stubs, you know, so it's a whole different world, VA. But I make sure I'm certified and I'm well known in my community to be a part of that community. And the other thing here specifically to AnnieMac Mortgage is we have a program where we're allowing our VA buyers to place actual cash offers. So now instead of them being at the bottom of that list of offers, now they're competing with the cash offers. So that was a huge reason actually for selecting AnnieMac to power our business, is to be able to give that opportunity to that community.
I remember we talked briefly about that in our first meeting, and I was fascinated by the fact that a mortgage company was stepping up in a way. I'm not sure you're able to disclose that, but are you able to talk about how that works, how it is that you're taking a VA loan and presenting it as a cash offer? Because I was blown away by this. You don't see this with a big box. Yeah.
Right.
You don't, and you don't see it anywhere, quite honestly. And I'm a researcher, so trust me, I rejected this notion a few times before I said, wow, this is real. Yeah. So AnnieMac Mortgage has a affiliate called AnnieMac Cash to Keys, and it's an equity firm who is providing the cash for these offers. So what's happening is our VA buyers are, being underwritten, of course, based on that financing requirements. And if they fit the appetite of the equity firm, then we are putting our cash up front for them. They're literally putting in cash offers. The idea behind it is that we're going to go ahead and complete that VA financing for them, and we will actually use that cash. But it's a guarantee to the seller, because regardless of the financing, we're going to purchase the home by the closing date. There's no extensions on these. So the sellers can be very confident that no matter what, when they sign on the line of our offers for our clients, they're closing. There's no mortgage requirements, and we're going to meet it.
Awesome. That's awesome.
And you might ask the question, wait, what happens if we do buy the house cash? Where does the VA financing come in after that? Right? It's an obvious question. But the borrower, the VA buyer, has 6 months to fix whatever caused the delay, and then there's a VA closing after that, which could work well for everybody, because depending if they need just weeks or months, we do that secondary VA closing to consummate that deal afterwards. Should anything get delayed, at least the seller won't have to think about these delays. We just work that out. And there's really, as it comes down to it, there is no additional cost for this program to those borrowers.
Yeah, that I was going to say that. It's not like somebody's making a big vig in the middle, a big interest rate in the middle. This was something somebody figured out how to do to give veterans a fair shake, which leads me to ask you, and I don't know the answer to this, so forgive me for putting you on the spot, but do you have any family members that are veterans and who may or may not have either had a story where they had a hard time buying a house, or they've been able to take advantage of something that helped them?
Well, my son's a veteran. He lives out in Colorado. The other son, not the one.
The other son?
Yeah.
Yeah, your brother-in-law. Yeah.
Right. He lives out in Colorado, but he bought a house, but I don't think he bought it through VA.
Well, yeah. So my brother-in-law didn't use his VA benefit when he could have, and a lot of people who are entitled to this benefit aren't using it because of misinformation out there, and they feel like it's going to hold them back and not get the result of the home. And so they're saving their hard-earned money when they already worked hard to not put anything down, all because of just wrong information. So he didn't use it. That's a good example. But I have a great story with Annie Mac. I had a military family here in Massachusetts, and they were displaced. The family was separate. And they came back together, were living with family. They had homeless, I guess you could say, right? And I pre-approved them like you normally would with your VA benefits. So they were shopping with just a standard VA pre-approval letter, and they were getting rejected. And in one particular home, there were no other offers, and they did not want to do VA financing. The sellers.
That's just awful. Yeah.
And then we were done with our underwrite with the cash offer program, and the next house, they were under contract. They had their offer accepted cash. We closed in 3 weeks. They received their deposit back at closing. They got cash back.
Wow.
And they were in the low 6% interest rate. I mean, it couldn't have been. These people were really struggling, and the whole thing, PTSD, anger management courses, like we're living through a very highly intense emotional journey. And to be rejected. I mean, that is a blow to anyone with someone with emotional issues too is tough. So it was wonderful to be able to close them in record speed, get their offer accepted with cash, no fees, great rate, got cash back. I mean,
what is the resistance to accepting somebody that has a VA loan? Like, as a seller, do you get your money slower? I mean, I don't understand why there would be resistance.
Because they're putting zero down, so they feel as if the buyers aren't solvent enough to get a mortgage. It's an intricate program, and not all of us loan officers are created equal with our knowledge. Okay. So your pre-approval letter is good as the person's name on it, right? So big, broad range of lenders out here. Not everyone knows everyone, right? Reputation's important. And also it's a government loan. So the VA does have a property standard. They want to make sure the home is healthy and safe for that military family to move into. So a big deterrent on those loans is peeling paint for lead hazard in here in Massachusetts. So if there's peeling paint, say in the home, it has to typically be corrected before we can go ahead and finish the financing. So sellers would take that as.
I'm sorry, Angela, regardless of the age of their children?
Yeah, it's regardless.
So,
it's always worst case scenario.
So that's the difference, Jess. If somebody else were just buying the home and not a VA loan, and there was peeling paint and there was lead, and they had children under a certain age, then there'd be a problem. But I think what Angela is saying is if you're a seller and you've got one person saying, well, we're going to put 20% down, and another person whose loan is 0% down, you feel like the person with 20% down is vested. They're in it. They're going to lose that money if they don't do something. So you think that that's a stronger sale, when in fact that's not necessarily the truth. I have one quick question for you about VA loans and again, nothing we discussed, but are VA loans still assumable? Do you know the answer to that?
Yes, they are.
So I will just chime in here and say that what that means is if you're out there, let's say the interest rates are high, they're 7-8%, and somebody who's selling a home had a VA loan at 3%, guess what you can do? You can assume their mortgage at 3%, and you don't have to be a veteran to do it.
Correct. You do have to go through an underwrite.
Yep.
You do have to qualify, and you're going to go through the servicer of that loan. So you would not go get a pre-approval from someone like me. It would be a very direct thing to that property and that seller and who their servicer is of their mortgage. So it's not a guarantee. You still have to put a down payment. I believe there are some fees attached to that too, in addition to standard closing cost fees. But yeah, if we're looking around 7% and you find a VA seller at a 2.25%, because they're out there, that would be a great deal.
Good point.
So one of the reasons I said that is because when we're talking about people using their benefit and using that VA loan, that puts them in a position in the future to have a very appealing sales technique if they have a VA loan, right? They can actually say, look, I'm selling my house for the same price as the next door neighbor, but my mortgage rate is at this level. And if you can qualify for it, you're stepping into a sweet deal. So
yeah, that would be a great strategy if we turn into a buyer's market, for sellers. I don't know how close we are to a buyer's market, but yeah, if I was a realtor, I'd be getting very well versed in that in preparation of a buyer's market.
Well, listen, in the next 30 years, while people are paying their mortgages, we're going to see buyer's markets over and over and over again, because that's what they do. They're cyclical.
We'll see.
Sure. Angela and Mike, how do they get in touch with you?
Well, they can always text us best, I say, 413-302-2215. Just a quick little hello and we can connect. I like to schedule calls. So just know I'll give access to my calendar and we can get you on it.
Great.
Oh, that's great. Frances, what's your phone number?
Sure. It's 413-773-3333.
And as always, you can go to hugyourmoney.com anytime. And we'll be back next week with another edition with the Money Doctor, Dr. Frances Raham on WHMP.